Hi, welcome back. Mortgage rates have reached their highest level in more than 20 years, and this is having a major impact on the housing market. In today's video, we're going to take a look at the latest housing market update for Riverside County. We'll discuss how inventory levels, prices, price cuts, and demand are all being affected by rising mortgage rates and what this all means for buyers and sellers. So get ready to learn some valuable insights, and don't forget to hit that subscribe button for more real estate updates like these. And as always, we'd love to hear your thoughts and questions in the comments section below. Let's get started. Over the past 2 weeks, the active listing inventory for Riverside County increased by 22 homes, bringing the current inventory to 4,253 homes. This is the highest level since April, but even with this slight increase, it's still the second lowest inventory reading we've had for the end of August since tracking began in 2012. Only 2021 was higher. Just last year, the active inventory was 41% higher with 6,017 available homes. And if we look at the 3-year average prior to COVID, which would be 2017, 18, and 19, the average inventory for those 3 years was 8,281 homes each of those years. So why the drastic change, and where are all the homes? Well, homeowners are continuing to hunker down in their homes. They're unwilling to move because they all have low fixed rate mortgages. In July alone, 2,708 new sellers came to the market, but this is still 1,500 fewer, or 35% less than the 3-year average prior to COVID. Now, something intriguing about Riverside County is that its inventory pattern doesn't follow the typical seasonal trends seen in most other surrounding counties. Whereas others typically peak in the summertime, here we normally reach our peak between mid-February and mid-March. In fact, this year's inventory likely already hit a peak in January with 5,486 homes. That's 30% higher than where we stand today. And in other words, what that means is that today we have 30% fewer homes, fewer available homes than we had on the market at the start of the year. And what that also implies is that we're likely to end the year with fewer available homes than when we started. Inventory is expected to gradually climb through mid-November and then decline rapidly from Thanksgiving to the new year. It'll be essential to keep an eye on mortgage rates currently approaching 7.5%, as they could significantly impact the inventory in the coming months. This relationship between rates and inventory is key. If rates climb, inventory will climb. If rates decrease, inventory will likely go down. Remember, a subtle sign for higher mortgage rates is an increase in inventory. So let's turn our attention to the demand side of the Riverside County housing market and see how mortgage rates are affecting buyer behavior. There's definitely been a noticeable slowdown in the sales pace, with a slight decrease in the number of homes going into contract. But here's the kicker. It's not falling like a rock. It's more of a gradual decrease. Demand, which is the number of new pending sales over the prior month, decreased from 2,015 to 1,894 over the past couple weeks, down 121 pending sales, or 6%. This is the largest 2-week drop we've seen all year, but demand has been flat for most of the year and hasn't changed much from month to month. And this drop in demand can be traced to two main causes: homeowners' reluctance to put their home on the market and persistently high mortgage rates. While some argue that today's mortgage rates are nothing compared to historical highs, the reality is affordability today takes into consideration more than just rates. It also takes into account home prices and wages. And with no sign that rates will drop anytime soon, buyers are starting to show a clear sensitivity to these rate fluctuations. Look for a gradual decline in demand through mid-November, and then a sharper seasonal decline from Thanksgiving through the new year. Last year, the demand was at 2,410 pending sales, or 27% higher. And if you look at the 3-year average prior to COVID, we were almost 50% higher, with an additional 908 pending sales. With supply increasing slightly and demand falling, the expected market time, which is the number of days it takes to sell all the Riverside County listings at the current buying pace, increased from 63 days to 67 days over the past couple weeks. Last year at this time, the expected market time was 75 days, and the 3-year average prior to COVID was 89 days, much slower than today. Now, the bigger picture is that all of these changes translate into real-life decisions for families and individuals looking to purchase a home. For buyers, higher rates mean higher payments, and this can affect their ability to be able to afford a home. And for sellers, higher rates mean fewer qualified buyers, possibly extending the time it takes to sell their home, or requiring a price cut. And we can see these changes in the price reduction data. Currently, 23.2% of the homes in Riverside County have experienced at least one price cut. This number is growing by about 2% per month, but it's not an indication that prices are crashing. Even though mortgage rates are higher this year, price reductions are 11% lower than they were last year at this time when they reached a peak of 35%. Buyers are reacting to mortgage rates with more caution, but these price cuts are not to the point where they're shaking up the market. Keep in mind that price cuts typically peak in October, so we're keeping close attention to the trends as we approach that time frame. While price reductions are keeping our attention, they're just one piece of the puzzle that shapes the Riverside County housing market. Now let's look at how home prices are moving in response to the dynamics of supply and demand. Currently, the median sale price for homes in Riverside County is $575,000, showing no change from this time last year. But if we look at the broader picture, home values are actually up almost 4.5% year to date. The Freddie Mac Home Price Index for Riverside San Bernardino Metro shows a 7% drop from the all-time peak in June of 2022 to December of 2022. However, since that point in December, home values have rebounded, climbing almost 5% through July of this year. And one key element supporting these prices is the low availability of homes for sale, which has been a constant factor, even in markets like Riverside County, which experienced a correction in 2022. We're also approaching a seasonal decline that autumn and the holidays normally bring. So as we move into the final months of the year, expect a softening of home values due to economic factors and seasonal trends. Mortgage rates have remained above 7% since early March, changing the game for both buyers and sellers. And this change is leading to fewer home purchases as homes become less and less affordable. Last year's rise in rates caused inventory to climb rapidly, but with persistently high interest rates, that pattern has changed. For homeowners now, the situation raises questions. Why sell a comfortable 4% interest rate and then borrow at 7% in a restricted market? And this is causing many homeowners to hang on to their properties. And if the economy grows this quarter, rates might climb even higher, adding another twist to this complex scenario. The story of mortgage rates is one of both opportunities and challenges. And as we move through 2023, it's a story that will continue to unfold. Join us in our upcoming episodes where we'll continue to explore the underlying dynamics and uncover the future of the Riverside County housing market. And don't forget to like the video and subscribe to our channel for more real estate updates. Thanks for watching. See you in the next video.